Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a proxy statement from Applied Therapeutics, and let me tell you, it's got a plot twist worthy of a soap opera. Think reverse stock splits and executive shakeups. But don't worry, we'll break it all down in plain English. So what's this proxy statement all about? It's a document that Applied Therapeutics sends to its shareholders to get their votes on some important decisions that will shape the company's future. First up is the election of directors. Think of directors as the supervisors of the company. We will vote on Tina Lerner to serve for another 3 years. Next, we have the very important decision to ratify or approve the company's choice of Ernst & Young as their independent auditor, to make sure the company's financial statements are accurate. Then, in a non-binding advisory vote, shareholders are invited to weigh in on the compensation of the company's top executives and how frequently they should get to vote on it. But here's where things get interesting. There's a proposal to approve a reverse stock split. Basically, it's when a company combines its existing shares into fewer higher priced shares. This is a somewhat desperate move that they are doing so they can keep being listed on the NASDAQ. We'll get into why this is important in a minute. Finally, they are looking to be authorized to postpone the meeting to solicit more votes for the reverse split proposal. So why do they want to do a reverse stock split? Well, NASDAQ, the stock exchange, requires that the company's stock price is at least $1. As of April, it was only trading at $0.32. If they can't get the stock price up, NASDAQ could delist their stock, meaning the company will no longer trade on a major exchange. There's a real risk if this reverse stock split doesn't work. NASDAQ has a new rule that if Applied Therapeutics stock price fails to stay above $1 after the split, or if they do too many reverse stock splits, they could get kicked off the exchange with no chance to fix it. Also, an increase in their stock price may make their common stock more attractive to investors. A lot of invest in what they consider lower priced stocks. The company mentions some risks to this reverse stock split. Some investors don't like reverse stock splits. The stock price sometimes goes down even after they do it. The reverse stock split would mean the company has more shares available to issue. This may have anti-takeover effects and could be used by the company to oppose a hostile takeover attempt, or to delay or prevent changes in our control or management. If approved, the company won't issue fractional shares. Instead, you'll get cash for any fraction of a share you would have received. Let's move on to the audit committee report. It's where the audit committee basically says, yeah, we reviewed the financials and they seem okay. The fees billed by Ernst & Young, the public accounting firm, increased from $613,500 to $995,000. Most of the increase was in audit-related fees. Now let's see who owns the company. Venrock Healthcare Capital Partners is the biggest shareholder with 9.4%. A few other firms, Alexandria Real Estate Equities, Vestal Point Capital, BlackRock, Schonfeld Strategic Advisors LLC, and Appel Biomanagement LLC own a large percentage of the company. Let's talk about executive compensation. The most important people at the company are John Johnson, the executive chairman, Les Funtleder, the interim CEO and CFO, Dale Hooks, the chief commercial officer, and Shoshana Shendelman, the former CEO. There were some big changes in leadership, with Ms. Shendelman stepping down and Mr. Funtleder taking over as interim CEO in addition to his current role as CFO. The company says it feels that a discretionary bonus program provides the best ability for the compensation committee to review individual and company performance on a holistic basis, and to appropriately reward our officers based on the compensation committee's assessment of all relevant factors. Here are a few notable compensation amounts. John Johnson, Executive Chairman, had a total compensation of $2,841,500, and Emin, Chief Executive Officer and Chief Financial Officer, had a total compensation of $2,880.80, $7,9,580. Shoshana Shendelman, the former President, Chief Executive Officer and Secretary, had a total compensation of $3,073, $843 and $633, $53 and $848. Shoshana Shendelman, the former President, Chief Executive Officer and Secretary, had a total compensation of $3,633 and $849, a $50, $7.70, $373,006. 33 had a total compensation of $3,733 and $843. Johnson got 1,000 in restricted stock units, or RSUs, and has an option to buy 2,000 shares of common stock. Half of these vest or become his after 1 and 2 years. The rest vest when their proposed sorbitol dehydrogenase treatment gets approved or there's a change in control of the company if that happens sooner. Fund later got a supplemental award of 150,000 RSUs and options to purchase 150,000 shares of common stock, which vest in 12 equal monthly installments following the grant date. Shoshana Shendelman got a pretty sweet deal on her way out the door, $97,500 as severance, plus another $2,100,000 for her RSUs and PSUs, plus the company is paying for her health insurance for a year. The company says they don't time the release of important information to affect the value of options they give to executives. Here, the company is trying to show you how executive pay lines up with how well the company is doing, but honestly, it's a lot of complicated math that doesn't always tell the whole story. To summarize, the company points out that revenue went up, so did executive pay. But remember, these are numbers, not necessarily real-world results. The company can issue almost 25 million shares from existing compensation plans. The weighted average price for these shares is $2.00. Finally, let's glance at related party transactions. It seems like the company is committed to making sure all deals are fair, even when they involve people connected to the company. So what's the story here? Applied Therapeutics is facing some real challenges. The reverse stock split is a high-stakes gamble to stay listed on Nasdaq, and the leadership changes add another layer of uncertainty. It seems like the company has very powerful and large shareholders. On one hand, the company says leadership is incentivized through some complex performance-based goals. On the other hand, there are very large cash payouts to former management who didn't achieve them. These payments put extreme cash pressures on the company, which could result in the company having to dilute shareholders by offering more shares, or worse, not being able to continue at all. Applied Therapeutics faces a tough road ahead. Can they pull off this reverse stock split and turn things around? Only time will tell. If you found this breakdown helpful, please like, subscribe, and leave a comment below. What do you think about Applied Therapeutics' chances? Let's discuss. Thanks for watching.